stock market? No, it's too risky. Haha, just like gambling. I guess this is not the first time you're hearing this. If you have heard about the stock market, then you would have also heard that it's too risky, too hot to get into. Nowadays, everyone is interested in investments. No one wants to have a single source of income. And investment seems to have a great source to get good returns from your hard-earned income. From youngsters to retirees, everyone wants to achieve financial freedom through these investments. Stock market, which has given the best returns and beaten all other investments available like bonds, commodities, gold, is definitely one of the favorite choices of the people. Although everyone has thought of investing on their own, but they have stopped because of some common misconceptions which they have heard from their friends, family, or maybe media. So today we are going to talk about the most common misconceptions about the stock market. Myth number one: investing in stocks is just like gambling. This one is very common among people who know nothing about the stocks. Because they know so little, they choose to believe it's random and unpredictable and very dangerous. But in reality, stocks are not a random game of chance in which the long term odds are stacked against you. Actually, it's quite the opposite. As a matter of fact, there has never been a 15-year stretch since 1926 when the stock market didn't deliver a profit. It has delivered a profit in 94% cases of 10-year periods and 86% cases of 5-year periods. Now, how many casinos do you know maybe in Vegas or in Goa with a long-term win rate between 86% and 100%? Let's try to understand this with the help of a few examples. If you take your money and spread it recklessly around a bunch of penny stocks without doing any research and you're just hoping to get rich somehow, that's kind of gambling. Or if you're putting all your money into a single red hot, cannot lose stock, which is all over the news headlines, that's similar to gambling. Saying investing in stocks is like gambling is sort of like saying driving a car is incredibly dangerous. I mean, sure, if you drive backwards down a one-way street at 90 miles per hour with a blindfold on, you have got to have a death wish. But if you drive the car safely and properly, following common traffic rules, avoiding well-known risks, it's not that dangerous. In that case, driving a car provides a ton of value and that comes with an acceptable level of risk. It's the same idea with stocks. If you do it wrong, it can be incredibly dangerous, but if you do it right, it can provide you with a ton of value for an acceptable level of risk. Myth number two: you need money to make money. This is the second most common investment myth. People easily presume that you cannot start investment until you have a whole lot of money, and this makes investment a rich people's game. But this isn't true either. You don't need millions to start investments. A good thorough research about the company and just a few bucks in the bank is enough for starting an investment. Even the greatest investor of all time, Sir Warren Buffett, started his first investment with only a few dollars at an age of 11. He didn't need $1 million to make him a billionaire. So why should you? You can start investing with as little as rupees 50 in many passive index funds and start building your own stock portfolio with as little as rupees 20,000. Yes, there are certain stocks with high prices you'd want to avoid until you have more money. But there's no reason you cannot start investing now and add to your positions over time. Myth number three: stock market investing will take too much of time. Many new investors imagine that to invest into the market, they need to act like a day trader and be glued to CNBC News and place trades 24 hours a day. That's definitely not the case. While it does take some time to invest in the stock market, especially if this is your first time getting in, it doesn't need to be a huge time investment going forward. If you wanted to do all your own stock research by hand, I think you could manage your own portfolio by investing 2 to 10 hours per month. Or maybe you could simply put your money in a passive index fund and check it once a year for like 10 minutes. How much time you invest is totally up to you. But don't believe the myth that investing in stocks is a full-time job. Myth number four: a low stock price means the stock is undervalued. See, the price of a stock on its own doesn't tell you anything about the value of the stock. Remember, a stock price is a cost to buy a tiny share of ownership in a company. Value is determined by how much profit the company provides you compared to the cost of buying a share. A rupees 10 stock could be massively overvalued. Imagine an unprofitable company with all those sort of legal troubles, and a 10,000 rupees stock could be widely undervalued. Imagine an incredibly successful company with fast growth that just declined 25% on news that they're delaying a new product release by like 30 days. To analyze valuation, you need to look at other financial metrics which we will be talking about in our upcoming videos. Remember, the price of the share on its own doesn't mean anything. Myth number 5. Investors who invest on their own are intellectually gifted. This last investing myth takes investing to a next level. It states that investing is not for everyone, but for only those who are intellectually gifted can succeed in investing. Now, although everyone knows that there is no connection between IQ and performance, let me quote the statements of two of the investing icons on IQ. You don't need to be a rocket scientist. Investing is not a game where the guy with the 160 IQ beats the guy with 130 IQ. End quote, Warren Buffett. The next quote goes like this: everyone has the brain power to follow the stock market. If you made it through 5th grade, you can do it. End quote, Peter Lynch. I would like to end this video by giving you a call to action. Go on Google as you finish the video and read about Isaac Newton, how he was a genius, but even he lost millions in the stock market, which proves that investment is not an intellectual's game. If you're still not sure as to why one should invest into the stock market, you can click on the I button to watch our video. So that's it guys. अगर वीडियो अच्छा लगा तो लाइक कर देना और हमारे चैनल को सब्सक्राइब कर देना. Basically, this video is a part of the basic stock market course that we have created. You can click on the I button to watch our other videos as well. So thank you guys for watching our video. This is Srijan Barnawal signing off until we meet again.